We need to make sure that the team are focused and understand the stage. We do pre-seed seed. If founders are starting to talk about what is going to be in 5 or 6 years, so we like big vision, but you need to be focused. You need to find a solution right now. There won't be a big vision if you are going to fail in the next couple of years, right? So I don't really care about your big vision. Even your small vision for the next 2 to 3 years should be big enough. So focus is something that we try to find in any founder team.
Hello, everyone. My name is Vinay. I lead investor partnerships for EMEA at Tracxn. Welcome to my series of VC interviews, the sourcing stack. Through this series, I speak with leading venture capitalists and investors to understand how venture capital is evolving, how investment strategies are shifting across markets, and where the next generation of breakout companies will come from. Today, I'm delighted to be joined by Lior from Horizon Capital, a venture fund investing across Israel and Europe, with a strong focus on early stage technology companies spanning AI, SaaS, and deep tech. Lior brings strong experience in identifying early signals across markets and backing founders at the earliest stages of company building. Horizon Capital has been actively investing across Israel with a focus on Europe as well. And Lior has a focus on spotting category-defining companies early and supporting them through their growth journey. Lior, it's great to have you with us today.
Thank you. Thank you for having me.
Let's dive into the discussion.
Happy to.
Let's talk about your fund strategy and evolution. Can you talk us through Horizon Capital's journey and how your investment strategy has evolved over time?
Sure. So my background is basically not VC. Came from the enterprise, fintech, gaming world. So my background is more operational than VC. Back in 2012, we decided that we want to jump on the other side of the fence and try to bring our operational background into the investment world. So this was the vision and the concept. So we managed to secure a small funding commitment from different LPs based on our background, and tried to deploy this into a very early stage founding teams. So this was the concept, finding the right teams with the right solution for a big problem, trying to bring money to the game and bring our support with the operational background. And this is where we started, 2012, very small micro fund, you can call it, because Israel is very startup concept focused. There are many different teams that are trying to build something. So the screening process is very critical. Today we are interviewing around 400, 500 teams a year. We invest in around 2 to 3. So back to the beginning, 2012, we started with our first fund. Today, we just finalizing deploying from fund number 3 and looking at raising fund number 4. Already warehousing few potential investment, but in a nutshell, this is the story. Focus on early stage team, bring funding, and a very adequate 12 to 18 months that we are sitting very closely with the team, making sure that all the right questions are on the table. We're evaluating all the options, obstacles, challenges, risk, and making sure that the founding team will take a decision with all the information on the table.
Great. I mean, I must say a very thorough due diligence that is taking place before you make a decision to invest in. Interesting. How has your approach to early stage investing changed in the last 2 to 3 years, especially given macro and technology shifts?
So it's a very good question. I think that the main potential or difference that we see now today and 3 to 4 years ago is the vast penetration of AI and ability to provide a quick MVP to your idea, right? 3 to 4 years ago, you had an idea, you have an assumption, there was a problem, you had a vision how to solve it, but to try to build something that works and bring some value took time. And time and money, and again, the competition was out there waiting for you to fail. So today, you can see that teams are coming into the table even in pre-seed stages with some MVP, with some solution, with some initial traction of the product, either with users or some data. So the ability to understand the ability to succeed and fail, by the way, is much quicker. So it's good to fail quicker than waste 3 or 4 years on something that won't work, right? So this is our philosophy. Do it quickly and try to find a solution. It doesn't have to be a bulletproof solution from day one, but it has to bring some value. And this is how we differentiate the teams. Somebody that keep the old vision of let's build very, very thick, but very robust, and let's wait for the product to be excellent and only then launch. We try to avoid it. We try to do it reversed. Let's start running and expect the market and the traction give us the conviction of what we're doing is right or not.
Great. Now, moving into your deal flow and sector momentum, from your current pipeline, which sectors are seeing the strongest deal flow momentum across Israel and Europe right now?
So I will start with the macro. Israel is very known for cybersecurity and the ability to provide very sophisticated solution to a very challenging security problem, right? This is a background. This is the challenge that bring us every day numerous challenges in security and defense. So recent years, this is the focus, right? But the butter and bread are still business concepts. AI brings a lot of firepower to solve first world problems, right? And optimization capabilities. So we still focus on that because we are significantly small fund. We can't really get into a very long or funding heavy startups at the beginning. So we keep the same concept. So we keep ourselves segment agnostic. So having said cybersecurity and defense tech very, very vivid in Israel, but all the rest are here to stay as well. Marketing and new momentum in traditional industries like legal tech, accounting, and others are still there to be solved. So we keep our eye open. We don't have any specific capability to support a specific segment because we don't bring a specific cybersecurity or defense tech background. So we're trying to keep it agnostic, and the potential is there as well.
Great. Very well framed. Now, are you noticing any structural shifts in where founders are choosing to build today compared to a few years ago?
Yeah, I think that the focus today is less on workflow and automation and tools. We're trying to focus on not a co-pilot concept, but more agentic AI, real technology. So it doesn't have to be deep tech in terms of how deep is the technology you are building, but it has to be agentic. It has to solve the problem and not just sit on the sideline and help you to optimize processes. We do believe that automation will is here to stay, obviously, but it will be covered by the big companies. They will build optimization or workflow optimization trends, but still the backbone of big problems won't be solved by specific companies. So we do believe that the agentic AI concept, that the structure would be around getting access to significant data, based on that providing a solution, is the structural changes that we see today. Less technical workflow automation and more agentic AI capabilities.
Interesting. Now, within AI, where are you seeing the strongest conviction today? Infrastructure, application layer startups, or vertical specific AI solutions?
So I think that the big companies that are looking into a deep tech solution going into infrastructure, we see many companies like that. We do believe the application layer is more interesting for us. I think that because we are looking at the early stage, small teams, so mid-sized market, small businesses, or mid-market is more interesting for us. Big infrastructure changes are more enterprise-focused solutions. So we are trying to bring a quick and easy cycle-based product to support the problems we're facing. So we're trying to not to get into an enterprise play that the sales cycle can be 12 months, 18 months for significant infrastructure changes. We do look at the solution that are quickest to deploy. ROI is very, very quick to acknowledge. So the application layer for us is much more interesting.
Right. How do you separate long-term structural opportunities from short-term hype cycles, especially in fast-moving such as AI?
So I think that the quick question to that is that we try to avoid hypes. We really try to avoid hypes. It's very easy to get puzzled by a new segment, a new infrastructure solution. We saw that. We try to avoid it because you don't really know it till it failed or it succeeds, right? So we really try to keep the core concept intake. When everybody is saying SaaS is dead, right?
Mm-hmm.
It's gone. It's no longer applicable. We don't really see it. I agree that SaaS is going to change faces, change focus, but it's here to stay, right? It won't be. It'll go through a vertical AI solution, right? It's not going to. It will be changed. It's not dead. It's not gone, and all the binary view of things today is a bit strange for us, right? When the hype, for example, on high valuation, every company with a small idea gets ridiculous valuation in terms of funding and acquisition. We sold. We didn't invest, right? There was a couple of years that everybody was crazy around. I'm going to invest. Round by round was billions in few months. We sold equity, we didn't invest. So we're trying to avoid this kind of craziness around hypes and trends, and everybody's trying to outwin each other in terms of investment and AI and agentic. We don't like it. We really try to keep the core the same. We need a big problem, big solution, the ability to execute and show ROI, and that's it. And everything become more simple, right? You don't need to get your attention. We kind of explore more areas because we are industry agnostic. We try to see something like music tech, right? Music tech is something that we will never invest 4 or 5 years ago. We didn't understand music. Technology was very, very problematic to build. But today, with some development capabilities, it's interesting. There is a solution for musicians that based on tech, ROI is great. You can do very, very impressive things with AI to support music, and why not, right? If there is a business logic behind it, why not? So this is the concept: avoid trends and try to keep the basic the same.
Great. I liked that you keep the hype aside, right? The fact that
trying to, you can't really do it all the time, but we are trying.
Great. Now, let's deep dive into your portfolio patterns and performance. Like looking across your portfolio, are there any clear patterns in terms of sectors or business models that are consistently outperforming expectations?
Because we're sector agnostic, we see everything. So we try to invest in different sectors. So we can see that let's say the successful solution are more around again, big problems with good solution that evolve over time. We saw that with Own Backup, for example. Own Backup was a company that did at the beginning Salesforce CRM backup data solution. Evolve over that, the gap was significant, the challenge was significant. They managed to build a very robust platform that basically helped companies back up and regenerated lost data points on CRMs. Keep the focus the same, right? Solution. The way was very focused. There is a big problem. We have a solution. We will deploy it as fast as we can, and we are not going to jeopardize the outcome. So we keep the focus on that, not hiding from or not trying to find a bypass. So the sector is not a real issue on our side. The market size, the problem is. So I can't really identify a specific one, but I can tell you that we can see today many ventures around around industry that nobody touched before. Legal tech, accounting, even supply chain in all the factories, right? There are many things that you can do today to start helping those, let's say, old industries that nobody touched them before, for sure not with an AI SaaS solution. So we start seeing this kind of trend. I wouldn't say trend, but solution that trying to solve those problems.
Right. Very interesting. The logistics tech was one of the most interesting sectors for VC funds a few years ago, probably a decade ago, right? Right now, the context has changed to fintech, AI, and deep tech, and a lot of other sustainability-related sectors. Interesting. Now, let's deep dive into the generic discussions about Europe, Israel, and US comparison. Just wanted to understand, like, how would you compare the startup ecosystem in Europe and Israel today, particularly in terms of speed, talent, and execution?
So it's a very good question. I think that the problem, the challenge, and the difference between Israel, Europe, and the US is very, very quick to understand. Israel is tiny, right? Look at the map. Israel is tiny, and so the ecosystem here is very, very supportive, right? It's not a competition between VCs; it's more a competition, right? We share deal flow, we share information about startups that we are trying to build. We build network of VCs in different stages. So the ability to create a very supportive ecosystem to startup is very unique. It's like the valley in the US, if you want to compare it, that everybody is focused on helping startups, but here it's very, very tiny and focused. And so pre-seed, seed, early stage, very, very easy for a good team to excel and flourish and get the attention and try to find the right backers at the beginning and even later on. So it's more, it's similar to the, let's say, the valley in the US. Europe is more fragmented, right? They are very fragmented. So there are hubs in the Netherlands, in the UK, and everyone has a specific, that's my sector favorite. Like, UK is more financial, fintech, gaming, The Netherlands is similar but with different approach, but it's very fragmented. So we do look at Israel more like the Valley, and our focus is US market rather than Europe market, right? Take for example, legal tech, right? If I'm trying to support legal tech team, Israel is tiny in terms of market size, so it's not relevant. So and the language as well, Hebrew is not relevant for us as well. So we are trying to build something around English speaking industry. So Europe is an option, but US is much bigger and less fragmented, right? So the ability to excel and succeed in the US is much more compelling. So try to support all the European languages, different legal infrastructure, different approach, and it's much more difficult. So for us, US combination with an Israeli team, we combine. There are many US VCs in Israel today. We have the ability to connect to VCs in the US very quickly. They understand the approach and they understand the value. So most of our startups are starting here, but round A, B is mainly supported or led by US VC. So it's different, but it's very clear. The path is very clear in terms of execution. I think that we know how to build pre-seed seed very fast. Execution at the beginning is very critical for us, so we're very good at that. Building a bigger company later on, we need to bring the big guns and different methodology and building infrastructure for a successful international company. This is where either we move the founders and the teams to the US, at least the sales and business teams, and building a larger scale company, which is a different scale, different capabilities, and in the US it's much easier to do.
Great. That's a very good way of describing the different market conditions. Now, let's move on to SaaS and AI convergence. Like, how are you seeing traditional SaaS models evolve with the rise of AI? Are they converging into something new, or still clearly the distinct categories in your view?
I think we touched it briefly at the beginning. I think that we see autonomous AI agent for measurable operational areas like marketing, finance, QA is much more interesting. I think vertical AI SaaS is the new change. We're not trying to solve horizontal problems. We try to focus. We have few companies like that. They're trying to. We have data race, for example, that build a financial FP&A platform to support financial teams. Very focused on the fragmented teams all across the world, trying to work under one financial team. It's very complicated. So vertical solution is the right answer, right? We see marketing with all the different tools today that everybody can create marketing creative content very quickly, right? You are able to do it, but you don't really know if it works or not, if it's good or not, if it's make any change in terms of marketing KPI. So we really try to see that the this concept is kept to make sure that, again, we are focused on solution and making the right ROI for any fee that the client is paying. So we're trying to keep it that. And again, cybersecurity is the holy grail of everything here as well. So it brings not only solution around cybersecurity, but the team that coming from, let's say, a cyber environment in the army are bringing a very good solution for business application, but the core of thinking is cyber, or a large vast of data information that you need to grasp and get some information out of it. So this is where we think that the trend in Israel will go.
Great. Now, just wanted to understand, So are there any key traits that you look for when backing early stage founders?
I think the key word we are trying to use here on even on the first meeting is focus. We need to make sure that the team are focused and understand the stage, right? We do pre-seed seed. If founders are starting to talk about what is going to be in 5 or 6 years, so we like big vision, but you need to be focused. You need to find a solution right now. There won't be a big vision if you are going to fail in the next couple of years, right? So I don't really care about your big vision. Even your small vision for the next 2 to 3 years should be big enough. So focus is something that we try to find in any founder team, founder market capability, founder market match is something that we look. We need to understand that the people that coming from with the idea coming from the problem environment, right? They need to understand the environment, the issues, the problem, and the solution. So founder market fit is something that we look from day one. We need to make sure that most of the team, or at least the core team, have this background, and I think that they need to know that they don't know, right? There is a great uncertainty at the beginning of your journey. You have, and it's think about 2-3 founders speaking mostly to themselves and trying to validate the problem outside, but they have some kind of a concept of how to solve it. And then they are coming to a VC that very focused on pre-seed seed, and we're trying to shake them a little bit, bring other options, bring other challenges they didn't think about. Did it provide other product approach that they didn't go. So we're trying to make sure that the team that's coming into the at the office are really focused, understanding the challenges, understanding the market, have some kind of focused solution infrastructure, and then if we are trying to shake them a little bit, see their response. So this is it. So making sure that they will be willing to hear us for the next 12 months, at least on a weekly, bi-weekly basis. We are not managing the company for them, but because we have a great operational background, we are. You will hear our voice. You don't need to comply with whatever we say, but you need to hear us and accept that there is another option you didn't think about. And this is what we are trying to find in founders: the ability to move fast, hear us, keep the focus for the next round or two. Later on, we can start to play a little bit different game, but the game at the beginning is very focused.
Great. Now, just quickly to summarize, if you are looking at a couple of sectors, say, what do you think Horizon Capital's next wave of investments, like, say, which of those 2 to 3 sectors you think will define Horizon's next wave of investments? Is it going to be AI or SaaS, any other deep tech startups, or the sectors?
I think vertical AI, agentic AI is the focus for us. The ability to run very fast, provide solution, and fix issues very quickly is a key. Let's say the target that we're putting in front of our founders is very aggressive. If 4 or 5 years ago we tried to reach to the next round with around 200-300K just to prove the product and the engagement and just initial traction, the bar is much higher today. We expect our founders to reach take 1 million, bring us 1 million in ARR in 12 months, which is very aggressive. You get there, let's make the next year 5x on demand 1 million, right? So the ability to build a significant solution-based infrastructure is critical, and the demand is much higher, and the competition is out there to eat you because they are able to at least provide the same pitch, right? Maybe they don't have the same solution, but they think that if there is a few companies out there that will be able to beat them. So they don't have any time to waste. They need to run fast, and they need to pivot fast if they hit the wall and they can't solve it, right? So the ability to be agile and understand, you know what, I was wrong. This is not a solution. The competition is much higher. There is a potential of different ICP, right? It's not mid-market now. It's enterprise, or it's small businesses. So the ability to pivot during the journey and not break everything and build from scratch is very critical. And we saw it a few times. Something is different than what you expected. So you need to act very fast and respond very fast. So this is it. So and SaaS and vertical AI SaaS agentic has the ability to provide those challenges, but the ability to solve it very quickly. So this is where we think that the focus for us will be in the next few years.
Great. This has been a fascinating conversation, Lior. Thank you for sharing your perspective. This was incredibly insightful. And to everyone listening, if you're building in AI, think about entering the space. There's a lot to take away from this conversation. Thanks again for joining us, and we will see you in the next episode of The Sourcing Stack. Thank you so much.
Thank you.